The growing proliferation of data center projects offers considerable opportunity for the U.S. property casualty insurance industry to develop innovative new property and liability coverages amid increasing demand, according to a new AM Best report. We're joined today by two of the authors of this new and important report, Associate Director David Blades and Senior Director Sridhar Manyem. David and Sridhar, welcome. So great to see you. Thanks so much for joining us.
Thanks, Lori. Great to see you, Lori.
So David, we'll kick off today's discussion with you. Can you take us through what you're seeing with the recent and perhaps even more current expansion of data centers across the U.S.?
Well, like you said, data centers have been around for a while, but we've definitely seen an expansion in the last several years. And I think it's, with the growth of cloud computing and the amplified use of AI across the different industries, what we've seen is that these have become much more prevalent. And from an insurance standpoint, since AM Best, obviously, we're focused on the insurance industry, Sridhar and I specifically on the PC side. And so we really took a dive and looked into the different exposures that these data centers are presenting. Part of the research, we definitely saw that the proliferation of these data centers is both, or the investment is both come from private investors and also on the federal side, infrastructure projects that have been in place that have, factored into the proliferation as well. So from that standpoint, again, our interest is really in the exposures that these data centers present and how the insurance industry is responding to them. And that's what, sparked our interest and sparked our look into it. We discovered a lot of information in terms of, just kind of looking at it, even seeing issues with regards to aggregation. We saw that there's about 4,300 or so data centers right now. And again, like you said, rapid expansion, and about 10, I think there's about top 10 states have about 60% of those data centers. So again, there's a lot of issues that we're looking at from an insurance perspective and how they're impacting our rated insurers. And that's what we kind of took off and looked at, and what we'll continue to look at to gain more information, to provide more information for the insurance industry and for our customers.
Well, let's turn to the impact on some actual lines of coverage. David, can you explain a bit about why business interruption is at the forefront and some of the risks that are involved there?
So if you think about it, these data centers, what's been so integral to them is a lot of customized equipment, and the computers, deep computer systems and vast computer systems. And so if there are fires, if there are explosions, if there is water damage or any kind of damage to this, very, very complex equipment, they can cause these data centers to be down for a short period of time. It can be down for a long period of time. And that can cause, given the size of these sometimes mega data centers, that can cause great financial loss. So that's what we're looking at from that perspective is, again, it's the customized technology that's in these data centers, and the fact that they'll be very hard to replace and difficult to repair. And so any kind of covered cause of loss that covers that causes the loss and keeps any of these data centers out for any significant period of time, that could cause significant financial loss. And that's one of there are other key loss exposures, but that's one of the main ones that we've looked at as we looked into it. Obviously, there's others on the property side and on the liability side, but definitely from that standpoint, because of how complex the equipment is, that's a big peril from a BI standpoint.
So just to add to David's point, I think he made a very good point about BI and the aspects involved, but there's also, added to that, there's also contingent business interruption. So it's not just these AI companies that are losing revenue because of BI and disruption to their data center infrastructure. It's also the clients that are leasing services from these AI companies that are losing their business. And so there could be a domino effect, if you will, from a disruption to the data center operations.
David, what other lines of coverage might be affected here, and how might that play out?
So I think we tried to look at all the different lines of business that could be impacted, from start to finish. And if you just think about from just the planning and building of a data center, so the builder's risk, from the time that it's conceived to the time that it starts to be built until the moment that it's actually a completed structure ready for operation. If there are any fire losses of any kind of a catastrophe, tornado, hailstorm, anything, causes damage to the facility while it's under construction, that could be a major loss, and that's from a builder's risk standpoint. So that's an inland marine exposure, but that's even prior to the center being up and operating. Then obviously you have just the first priority property loss. Again, any kind of fire, loss to any of the equipment or to the structure. In some of these structures, there's equipment that's housed outside of the physical structure. So again, you have catastrophes, any of those severe convective storms, hailstorms, tornadoes that could impact that equipment. And so they could cause loss to the owner of the data center from a first priority property standpoint. Also, these data centers, there's a tremendous amount of power and even water supplies that's used for cooling in these data centers. So any kind of environmental related loss, if there's any kind of disruption to the local power grid in the area that they operate in, or if there's anything that goes wrong with the water supply in those areas, obviously that could be a third party loss. So from a general liability standpoint, or environmental liability, like I said, if there's something that might hamper the water supply in the nearby area, there could be that exposure. And then obviously, since we're talking about deep technologically dependent facilities, cyber, from the standpoint in cybersecurity, especially if any of these data centers are housing proprietary information or private information, sensitive information, any type of they definitely have exposure to cyber loss from that standpoint. So there are a number of losses. We mentioned obviously the business interruption, that comes from the first party property losses that can obviously also exacerbate BI, but there are many different losses and exposure. And that was really the focus of our report, to look at the proliferation of these data centers, and then from an insurance company standpoint, what are they faced with being able to provide the necessary coverage.
Sridhar, the report also refers to a potential investment side risk. How might that materialize?
Yeah, so we're digressing a little bit from the underwriting aspect of the risk, right? So David spoke well about, I think he was pretty comprehensive about the underwriting risks involved. But in addition to underwriting these data center projects, insurance companies are also investors in these data centers. So they could potentially gain exposure. We've seen insurance companies' interest in commercial real estate. So they could get exposure through equity in these commercial real estate companies, through REITs and infrastructure funds, and so on and so forth. And these data centers require multi-billion, sometimes running into trillions of dollars of investments. And some of the companies, if they want access to capital, they raise capital through insurance companies, and some of those funds are in the form of private credit as well. And we've seen private credit as an asset class grow pretty significantly over the past few years. And the way these data center companies raise money, I mean, they depend on, they want it fast. They want it. These are complex structures, sometimes negotiated off balance sheets. So all these kind of complex structures lend themselves to issuing loans as in the form of private credit. So there could be, insurance companies need to be diligent about the kind of exposure that they're taking, because this is still a evolving technology, and technology in general tends to change really fast. The inflection points happen without much of a warning. So just the exposure needs to be studied. It should be diligent, and needs to be limited with a certain risk appetite.
What role does innovation have here?
Usually insurance follows economic growth. So as these data centers are growing. They have huge insurance need because they want to make sure that they are resilient, they are being proper custodians of their owners' capital and also of their customers. So in order to be good fiduciaries, they need to have insurance in order to back up. And insurance companies need to develop expertise in risk engineering for these data centers. I think that's a critical underwriting underwriting skill, and the demand for insurance, right, clearly is a lot with these trillions of dollars of exposure and billions of dollars of investments and so on. The demand for insurance is a lot, and we don't know whether the supply is going to keep up, will be able to keep up. There could be some innovative structures like captives in the picture, but still, I think the kind of underwriting expertise that's needed, that needs to be developed, risk tolerances need to be established in order for underwriting data centers, and the amount of capacity being provided. I think definitely lots of innovation in terms of underwriting this new and upcoming exposure, I would say.
Absolutely. Sridhar and David, always a pleasure. So great to speak with you both. Thank you so much for joining us today. Greatly appreciate it.
Thank you, Laurie.
Always great to see you, Laurie.
That was AM Best Senior Director Sridhar Manyem and Associate Director David Blades. You can find the full report online at ambest.com. For AM Best TV, I'm Laurie Chortis.